Morning, Steve Free in Chicago with the morning grain comments. Well, a very mixed trade overnight, both in financials and commodity markets. Stock market's down, crude's down, and gold's down. I think some people feel that the increased cases of COVID, both in Europe and the United States, could continue to hurt the economy. The lack of a stimulus package here in the United States is also maybe weighing on stock market and crude. As far as the grains are concerned, beans are down, corn and wheat are a little bit higher. I think that in the grain markets, a couple of things. Number one, as far as weather is concerned, the U.S. 6 to 10 days seems to be cool with rains around the Midwest. As far as the Southern Plains are concerned, maybe only the eastern part of the Southern Plains will get some shower activity. There is talk about some rain in Russia. Again, this might be light and scattered and not necessarily a pattern change, and we continue to see the Matif and the Black Sea CME wheat futures making new highs. Russian farmers continue to be a reluctant seller of cash until they get a good rain. Down in South America, it looks like central Brazil could see some rains. It may not get up into the north. Argentina could also see some rain, but we noted yesterday that the Argentine government announced 8% of their central wheat areas will be abandoned due to dry weather. So even a quick shower across Argentina may not help the overall soil moisture situation going into corn and soybean planting season. We also noted in Argentina that they announced they will not devaluate their currency and that they will not seize bank deposits. And this all encompassing increased economic crisis down there and increased COVID cases. We also note that there was talk yesterday in the corn market that China may actually import a total of 30 million metric tons of corn. Maybe 3 to 4 out of Ukraine, 1 to 2 out of Brazil, and the rest might be U.S. That could suggest that U.S. could export 23 million tons of U.S. corn to China this year, and the USDA may have 14 plugged into their export number. So that may tighten the corn situation. It could even rally D's corn over March. As far as the soybeans are concerned, China yesterday was a buyer of somewhere around maybe 4 to 6 U.S. soybean cargoes and maybe as much as 8 Brazil cargoes for February through June. So their appetite continues to rise. And there is talk that U.S. farmers may need to plant 90 million harvested acres in 2021 with a yield of 50 just to loosen the U.S. soybean balance sheet and satisfy the demand. The fact that NOV 20 minus 21 NOV soybean spread is plus 79 would suggest that NOV 21 soybean contract is not high enough to increase that many acres. And finally, the U.S. export sales data is delayed until tomorrow because of Monday's holiday. So we get the ethanol information today. Funds are still long: corn, beans, wheat, meal, oil, and it would seem like the demand underneath the market will help support futures prices where they are, despite the fact we're going into the U.S. harvest. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.